Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jon Ferro, along with Lisa Abramowicz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.
Sarah Hunt of Alpine Saxon Woods writing this. We still see a land grab and a spending boom on the backbone of the AI infrastructure. With valuations at high levels, there will need to be further evidence that spending does not pause. Sarah joins us now for more. Sarah, good morning. It's good to see you.
Good morning. It's great to be here.
Are you nervous about what we might hear from some of their customers later this earnings season?
I think we're still in a place. I mean, it's interesting because I saw a note that I think Goldman put out on the fact that maybe they were spending too much. And I'm thinking, how do you say that right now? It's a little bit early to say you're spending too much. It reminds me of, just to date myself, the dark fiber discussion in 2000 about we're putting in too much dark fiber. Well, the internet absorbed it all. So the question is, what is enough infrastructure? And I don't think we have the answer to that yet. It's just a law of large numbers problem now.
To build on that, should we reward the Apples? This was ultimately the Goldman call for having some big stock buyback, or reward those that are investing all this money in the future? Some big outlays that we're seeing at the likes of Meta and other names too.
I think that's a little bit just trying to split the reality of you're rewarding the companies that have a lot of cash. What they do with that cash, as long as it's not something that seems absolutely ridiculous, is still, we have a lot of cash and that's where I want to be. So I think that, for Apple, that makes more sense for them right now. And for the other companies, it makes sense to do what they're doing. So I don't think unless it's not some acquisition of something that's making no money or something along those lines.
What do you make of Russ Kosteric's argument that essentially there is a very positive story to tell with a lot of these AI companies and the sort of big tech names, but sentiment has gotten so overinflated and people are expecting such big beats that in the near term, it just seems nearly impossible for them to exceed those to the same degree. Do you agree?
I think this is the difficult part right now because there will come a point where all the spending on infrastructure will slow down or the delta will go negative or you haven't got enough use cases for the other companies that are supposed to start getting more profitable on the back of AI. And I think when that happens, and I think it may happen, then you're going to start to see people really worry about valuations. I don't think that we're there yet because I think that you're still spending a lot of money, but I think that the concern will be, okay, we've built all this infrastructure, sort of like the dark fiber argument. We have all this stuff, but we can't use it enough yet. But it will get used, and it will ultimately, I think, just not sure the use cases are what we're thinking about right now.
It feels like it's almost easier to speculate on whether AI is a bubble or not a bubble and what the potential is, rather than talk about the other 493 names and how hinged they are to an economic cycle that's really questionable. I want to go back to Delta. You mentioned Delta. It was supposed to be the darling of a cycle that benefited people who have the money to fly around the world and are doing so in record numbers. Is that sort of a signal to you that there is some fundamental problem in consumers that will percolate to a broader number of potentially consumer-facing companies?
Well, I'd love to look at the release because I didn't get a chance to go through it very carefully, but is the problem the revenue line or is the problem the cost line? You mentioned earlier the extra costs. This has been the question about what happens when inflation comes down. Do margins start to get squeezed? If this is more of an issue of margin squeeze, then it's not a problem on the economic front. It's more a problem on an individual company front because everyone's got to figure out how to deal with their costs. A lot of labor costs went up in the last couple of years. Those contracts are only starting to come through. I think that's part of it. So they might be blaming it on cutting, too much capacity, but having flown recently, I don't see any excess capacity anywhere.
Who has pricing power right now? Where do you see that? If you can pick an industry right now, who has pricing power? We mentioned Costco earlier today putting up membership fees. Where do you see that pricing power?
I think the pricing power is coming through in the technology space. I think that NVIDIA is getting better prices than they were getting before because they're the only ones who have it. I think any place where something is in short supply, you have some pricing power. And I think on the technology side, you have more pricing power. I would argue that the airlines do have pricing power, having paid for airline tickets. But I would also say that it depends on where you're going and it depends on the timing of that. But I think that in the end, any place where there is any kind of capacity constraint, you have pricing power.
What is it about airlines that everyone just loves to rant about? I mean, I could join you too. It costs a fortune and it's miserable. Why is it always miserable?
because we are at a point where so many people are flying that even as they're increasing capacity, the airlines, the airports can't handle it. The airlines can't handle it. There's nowhere to sit. It's hot. I mean, I can go on and on.
I remember when I was a kid, I used to go to the Midwest frequently because my family lived there. We flew on Midwest Express, which they had, glass little salt and pepper shakers and home baked. It was a very nice experience. Everything was first class and it went out of business. But you raised this question about how much you end up with cost structures that are only now getting bigger. Do you think that people are underestimating the margin compression that we could potentially see this cycle? Because, yeah, the pricing power is in NVIDIA, but it's not necessarily in Delta? I mean, it kind of is, but we thought it was. But it isn't necessarily in some of these other areas that are also dealing with fundamentally higher costs that haven't come down.
I think that is, we were concerned that there was going to be margin compression earlier than there has been. So it might just be that there's a lag on that margin compression because the costs haven't really caught up yet. Everything, we're such immediate people. The price changes today. We can see this today. In business cycles, things take longer. Contracts take longer to play out. It takes longer for people to figure out exactly what their cost structure is going to look like. Fuel prices have come down. That should have been of help to them. But it also might be that because they were using fuel that they'd bought at higher prices, it won't come down until the third quarter. So I think that there's a lot of rolling cost situations that we can't see because we're not those corporations. And we're looking at things from that, Wall Street immediacy level of I need to know today what's happening tomorrow. And I think that that's something that is going to have to play out in the next several months. And we're starting to see whether or not that's going to happen. I don't know if Delta's a bellwether or if that's just a one-off for them.
What are you more interested in today, CPI or the president's press conference at 5:30?
Yes. I think that both of them are important, right? I think that, you had a guest on earlier today who said that one number isn't the most important thing. Well, it's not the most important thing unless it goes very much in the wrong direction, right? So if CPI went very much in the wrong direction, it would be the most important thing. I think that there has been chaos since the original debate, and I don't think that chaos is yet over. I think all of the discussions you were having earlier, none of what anybody is saying makes sense except tell me something I want to hear. And until I hear what I want to hear, I'm not believing what you're saying. And so that's where we seem to be. I don't know that that's going to make the press conference today is going to make that any different. I don't think to the extent, it's unfortunate, but I don't think to the extent that, it's not wrong that age is not something you can take away.
Noise or news? Do you think it's real news for this market, the considerations that are percolating over the last few weeks?
To the extent that we've seen both of these people as president and the market has reacted well to both, I think I understand why people say whoever's president is noise. But political chaos is not just noise. And if it gets too chaotic, I think that is going to take people's risk appetite down to some degree. But we don't know that yet, and we don't know what kind of decisions people are facing right now. We know where one side of the ledger is. We don't yet know where the other side of the ledger is, even though he keeps saying he is that side of the ledger, and nobody seems to believe him.
We're waiting for him to make a decision, Sarah. You know that. Sarah Hunt of Alpine Saxon Woods. Sarah, it's good to see you. Anne-Marie is in Washington with a special guest, the Democratic Congresswoman Haley Stevens of Michigan. AMH is over to you.
Thank you so much, John. And Congresswoman Stevens, you're also going to be in Michigan tomorrow with Biden.
Yes, I am.
You're a staunch supporter of him, and you're not backing down. Why?
I'm really enthusiastic about this campaign and what we've built in Michigan. I've been rigorously on it since the beginning of the year. Detroit is at its lowest levels of unemployment in 50 years. We have manufacturing growth. I have a really popular governor, Gretchen Whitmer, who's endorsed this president, who's a co-chair of his campaign, who's met with him since some of the debate fallout and is sticking by him and the commitment to stand up for women's reproductive rights, to tackle our gun violence epidemic that has hit us pretty hard in Michigan. And there's a team, right? We have built an incredible ground operation, and it's hard work with persuasion voters, with turnout. I don't want to turn away from this, though, now. I want to keep going. 15 some weeks left. Let's bring this over the finish line. And I believe and know that the Biden-Harris ticket is the one to get this done for us.
Do you think he's the best candidate, though?
I do.
You see the polling today from Washington Post, ABC. More than 56 Democrats say, 6 in 10 independents say he should step aside. Is it that he's the best candidate at this moment, or there's concern about basically telling a sitting president, the leader of the party, that it's time to go?
Look, the stakes are high. The other thing that the polling is showing you is that people are freaked out about Donald Trump coming back. What that means for young women, what that means for our economy that spiraled out of control when he was president during a global pandemic that was not well handled by him.
But polling also shows people think Trump would be better when it comes to things like the economy, which our polling shows is still the #1 issue.
It is the #1 issue, and it's not just look at the facts today. Look, polling is absolutely important. I have to look at polling, and I have had polls that have led me down a path of success, and I've had polls that have led me wrong before. But what I know is that people are concerned about Trump. I mean, I hear that on the ground in Oakland County, Michigan. It is palpable. People want to win. These stakes are high. Obviously, when President Biden was gathering his delegate votes and campaigning in the small primary that he had earlier this year, it wasn't 100% clear every step of the way that Trump was going to be the nominee. Now he's hiding in Mar-a-Lago. We don't see him really very much. He's come to Michigan maybe once or twice, a few surrogates here and there. Pretty quiet from him. And in part, we've got a president who's governing, who's leading NATO, who's got the backing of international leaders who support his plan. We have, by the way, a major foreign aid package that got done in a divided government. That's exactly what Joe Biden asked for.
But I think the concern is not so much can he lead right now, it's what does the next 4 years mean? And you mentioned Governor Whitmer. She was on CNN last night and she was asked, should he take a cognitive test? Her answer was it wouldn't hurt. Do you agree with the governor?
Yeah, well, Trump joked around about his own cognitive tests and, that he was some super genius and was spouting off things. Look, anything the president needs to do to reassure people. I have been recently with him when he announced tariffs on Chinese EVs and critical minerals. I was in the Oval Office with him for an extended period of time. I haven't seen one decision coming out of this administration under his leadership that concerns me. I also know that we have got a message for the next 4 years. It's clear people are spooked. It's also clear, though, people are united to do whatever it takes to beat Donald Trump, and we've got the campaign to do it. We really do.
You've spent time with him recently. You're going to be with him tomorrow. Yeah. You said there's not a decision that makes you rethink this that's coming from President Biden, not a decision you see that concerns you. But what about his speech, the way he walks? Actual deterioration in his health. Have you seen any of that?
Not really, to be honest with you. I mean, look, I know I can't tell people to unsee what they saw in the debate. I thought he answered it honestly. Look, it's not news that he is the age that he is. I look at this and I see flawless execution from this administration, COVID relief, infrastructure dollars, not just bills that have gotten passed, but things that are being executed flawlessly, like the CHIPS Act, which is so important to our Michigan manufacturing economy, something that President Biden has championed. His campaign message is let's finish the job. There is more to do. It's promises made, promises kept. There are more things that we need to accomplish here that are on the horizon. Paid leave, funding for our public schools, support for our educators, the next generation. This is a real campaign. And look, this is a tough moment. It's been quiet. We've had 24/7 Trump TV and his convictions and all that insanity. I don't want to go back to that. My voters in Michigan are terrified of going back to that. I mean, the former president pretends that he supports unions, goes to a non-union shop. We worked for the UAW. We got the UAW endorsement. We've had this whole process here. We're weeks out from our own convention. We got to stand up to this Trump team.
Union leaders are concerned. Washington Post this morning, there was a behind-the-scenes meeting yesterday. Jon Ferro. President Biden went and stood on a picket line with this man. He is now voicing his concerns. So when you're in Michigan and you hear from union leaders, Trump is chipping away at these people. Michigan, potentially, Biden can lose. That's what Congresswoman Slotkin even said on a recent donor call.
Yeah, look, we want the winning campaign. And our union leaders, they're deploying their members to knock doors, to evangelize this effort. And that's what you do in closed-door meetings. You do say, hey, what's our plan? How are we going to do this? We're the Democratic Party. Differing opinions, expression of opinions. I've had 4 to 5 Republicans Republican members of Congress from Michigan who've either left their party, impeached the former president, or got voted out. I mean, give me a break. Like, this is how it works in our party. It's a good and healthy thing. And I'm going to tell you something else that I know about Joe Biden. He is the ultimate comeback king. He's the most underestimated individual in American politics. He always has been. He's got a good North Star. He's tapped into his faith. He's been through things that have tested him for this moment. And yes, he's our older, wiser president. He has not steered us wrong, and he has got a vision alongside this amazing team that he has to continue to win the future for us.
Congresswoman Haley Stevens, thank you so much for your time.
With us around the table, Steve Ricchiuto of Mizuho, still with us, David Kelly of JPMorgan Asset Management. David, just got this from Neil Dutta of Renmac. The Doves have what they need. It's time to cut. Get on with it. Do you agree?
No, I think they should go in September. I think they just need to be steady as they do this, because if they rush it, it's going to actually look like they're scared about something. And I mean, I don't think they should have gone this high in the first place, but now they're here, let's take it down easily. So I still think September, December, March, June, September, December. 6 rate cuts, 1.5 years. I think that's what they should do.
Powell in Sintra, Portugal, said a strong labour market gives them some time, the luxury of time. Do you think he has that time as well?
Yeah, I think so. I mean, there could be some cracks in private credit. There could be some cracks in regional banks. I mean, we are concerned about things that are not set up for normal interest rates. But remember, long-term interest rates are kind of at normal levels here. A normal business ought to be able to operate here. So I think it's, if it slows the economy a little bit is by not accelerating this, okay. But I would rather they take their time and not rush this, because once they start rushing rate cuts, then it's going to scare people.
Steve, what's your impression? I know that you've been on the maybe they shouldn't cut at all. What about given how much inflation's come down?
Again, you've had an inflection point in the economy. We went from 3.3% last year with an economy that was clearly growing too strong and inflation was not going down. You had a shift to a slower growth economy this year, 2.2, 2.3%. You've had some benefits of that in terms of a higher unemployment rate, a lower level of inflation. Is the economy going to stay a trend, or is it going beyond that? That's now the question they have to answer. They also have to worry about the risk, because as David mentioned quite clearly, the concern is if they move too quickly, the expectational set in the market could get ahead of themselves. You know, you've already seen one or two strategists on the street saying they're going to cut rates 8 times next year. So you've got this environment where if the market goes too far, they then have to think about, will they then have to reverse policy? So the dots have kind of put them in a bit of a tricky box for themselves. So they really can't do a hawkish cut. All they could do here is do a cut that fulfills the dots, and the markets are likely to go well beyond that.
Okay, pause. This is something that people used to talk about. We have just gotten 37 record highs on the S&P 500 this year. Why is that not potentially problematic enough for them? Why is that welcome? You think it should be?
It should be, but this is a different Fed. You have to take a look at the people at this Fed. These are a bunch of political economists. They're not the old school anti-inflation hawks. The political economists want to play with the levers. They've written their dissertations on playing with the levers. They want to play with the levers. They're going to play with the levers. We're not arguing about if, we're arguing about when and how the market will react to it. They think that they can control the market's behavior, and to a certain extent, they've done that. And they've gotten a great hand, let's be honest. They're getting everything they want. The economy looks as if it's slowing. The labor market looks as if it's coming back to normal. Inflation looks as if it's coming down. To me, this is a winning hand. Why would you toss it out by doing something stupid in July? You wouldn't. You'd sit back and wait.
The other thing about it, if there are parts of the markets which are over-exuberant, it is entirely the fault of the Federal Reserve for going 10 years with rates at 0. I mean, if you make the carrying cost of crazy 0, then people do crazy things. And so we saw that. Then we got momentum going in Bitcoin and meme stocks and even the Mag 7. And what's happening now is you've got a stable economy, people just doubling down on the bets that have worked. But we want to see more fundamental investing rather than momentum investing, but they've sort of caused this momentum investing environment by keeping rates so low so long that you could get all these irrational bets going. And now the problem is, well, how do you get out of that? And I think you just return to rational interest rates, which makes sense based on the economic fundamentals, and then over time markets can return to that rather than trying to manipulate markets by moving interest rates too quickly.
Steve, what do you make of that argument, that essentially if they adjust policy that will help some of the names that haven't participated in the euphoria? We're seeing Russell 2000, which has underperformed, actually outperforming at rate cutting expectations, not necessarily NVIDIA.
I think there has been an environment in here in which basically the underperformance has been a function of the fact that earnings for a lot of these companies haven't been good. And the reason why earnings for a lot of these companies haven't been good is because their costs have gone up. And not only that, because of the discount or the slower growth environment that we've seen coming into this year, it's harder for them to pass those prices on. So they're getting squeezed. The question is, what is the next reaction to it? I think the answer is if the Federal Reserve begins to cut interest rates and the market goes very aggressively, which I think the market will do, the market will overstate what the Fed is going to do, because every time they cut, they go to zero. I guarantee you, as soon as they cut, you are going to see zero hedge, and you're going to see a lot of news stories out there about there must be a collapse in the real estate market. There's something going on in the economy. The Fed knows something we don't know. We're going to be talking about zero levels of interest rates. Once that happens, they're going to be faced with a very different situation. This is why equity analysts have been unwilling to cut their earnings, because they know that basically whenever the Fed cuts, they go to zero. So we're expecting them to cut, we're expecting them to go to zero. So why would I ever cut my earnings numbers? I'm going to have a real bullish economy.
The most dangerous time for the economy is usually when the Federal Reserve decides they're going to help it.
Is this the point that you're making, just on the timing, that they wouldn't go in July because it would spook people?
Yes, I mean, I think there is a cadence. There are 4 big meetings where they put out new summary of economic projections and 4 smaller meetings where they don't. And I think a cadence of cutting rates at every summary of economic projections meeting, so this is September, December, it makes it predictable. And you also get down to, look, our terminal rate here is essentially a normal rate of about 4% or so in the federal funds rate. That's where we're headed until the economy actually or financial markets in the economy need us to do something. But they shouldn't try and micromanage the economy, and because what they end up doing is causing bubbles and busts in asset prices.
I'd like the view from both of you on the following question. Are there political considerations at play here? Do you think there are?
I believe they try very hard not to interact or make political decisions or overtly political decisions, because they don't want it coming back at them. Deep down, I know they prefer a government that lets them do their job, because while I don't always agree with what they do, I think we would be infinitely worse if we had people from the other side of Washington telling them what to do. That would only make the situation much worse. So I'd much rather the Fed make mistakes, but they're honest mistakes they make on their own with the best intentions for the country, rather than have the other side of Washington make the decisions for them. Steve?
Well, I think the answer is they want to maximize social welfare. We can argue as to the right way to maximize social welfare. The inflation hawks would say keep inflation at 2% on a sustained level and let the economy find its own equilibrium on the real growth side. This Federal Reserve, on the other hand, wants to maximize social welfare by keeping unemployment very, very low. There's a big difference in the fundamental profile, and that's the reason why I'm sitting here saying it's nuts if they cut interest rates. They run a lot of risk if they will cut interest rates, and they may have to reverse it down the road because they've created this instinctive response in the marketplace. But I also think you have to keep in mind, this Federal Reserve has been itching to cut rates. I think they'd be crazy to go in July. I think it's an open issue as to whether or not we could talk about September. It's always been about not if, but when, and we'll see what the data shows us between now and then.
So what you're just saying is that essentially the most important number for them is the employment number, not necessarily the inflation number. Is that correct?
They don't want to see a rise in unemployment. No, they don't want to see it. Keep in mind, the rise in unemployment we've had today goes back to something David said earlier, which is basically the household employment is dipping and the payroll employment. No, it isn't. The reality is, whenever you re-benchmark these two series, guess what? It's the household employment that's adjusted to payroll. So the payroll is the better coincident indicator of what's happening. So you've had a dip down in household employment, you've had an increase in the participation rate, and the unemployment rate has gone up. You've had very few layoffs, according to that same household survey. So you actually have an environment in here in which people aren't losing their jobs. So to me, the labor market is actually still tighter, and that is what they're paying attention to.
Well, I think it's almost like we've seen a microeconomic change in the labor market rather than a macroeconomic change. Because if you go back to when we hit a trough back in April of 23, if you could fog a mirror, you got a job. And frankly, there are a lot of people in America who shouldn't be employed. And what's happened is, if you look at what's actually happened with the unemployment numbers from the household survey, it's the long-term unemployed that have gone up. And that's really interesting in an economy where you've got 8 million job openings. There are people who after 15 weeks, after 26 weeks, cannot find a job. That's not about the economy. That's about are these people employable? And so I think what's happened is I think Chairman Powell's right. We have actually returned to a kind of normal labor market at 4.1% unemployment. I don't think there's anything wrong with that. I don't think it's a sign of great macroeconomic weakness. I would take issue with one thing, though. I am concerned that the payroll survey may be overestimating things, because when I look at business formation data, it's suggesting that we're creating all these businesses, and if that's feeding into their birth deaths model, they may be getting that a little bit wrong, because I think there's a lot of churn in businesses. I don't think this is much new business creation as some of the data would suggest.
Just want to offer this up. Fed funds futures have just readjusted to about 85% chance of September. So that sounds like it's a bit more in line with what I would expect, given what we're seeing. I'm curious, Steve, given what you're talking about, how you would see some of the earnings that we got today that indicated a real reduction in consumer spending and definitely less pricing power more broadly.
I think it indicated more the less broader pricing power environment. But again, we're still running an inflation rate well above 2%, even with these numbers. So we're still a percentage point above. And if we're going to say, oh, gee, the deceleration from 3% to 2% is a big movement on growth, okay, the movement from 3% to 2% on inflation has to be considered a big movement, though. So we're still, in that environment. So I think that the reality is, when we balance it and we look back at the data in general, we take a look. They're still well above their target on inflation, and they're still maybe at trend growth. Okay, where do we go from here? I think the reality is that you're seeing an environment where cost pressures are squeezing companies. And that's really their problem. And they will, if you cut interest rates and you have a sharp rebound in economic activity, they will pass those price increases along. And when that happens, then it becomes a problem for them. This is why go slow, take your time. You've got a winning hand. Why would you do anything today or potentially September to destroy that winning hand? It makes no sense to me.
I just wanted to know if fogging mirrors was on the job description at JPMorgan. That's all I want to know now.
I wanted to know what he was talking about. Is it that you get close to it and you go,
That's how you check if somebody's actually above the living. You put a mirror up to their mouth.
Okay, thank you.
Catch up.
Thank you, I'm
just
trying.
hoping no new hires at JPMorgan are watching this. Steve Ricchiuto of Mizuho, David Kelly of JPMorgan, to the both of you, thank you. Gents, just fantastic.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.